Hey yo, what is going on, viewers of the tube? My name is Tyler and welcome to the only crypto channel where at first glance you would think, what is this homeless guy talking about crypto for? But don't judge a book by its cover. This is one of the smartest channels around. It's time for Chico Crypto. The concepts of negative interest rates and negative yields have been making their way into the news cycles across the globe, and actually into some countries they are already a reality. This is so important to Bitcoin and the crypto ecosystem because Bitcoin was specifically designed to make these impossible. It's like Satoshi knew that with the 2008 financial crisis, negative rates were soon to become a reality. So Bitcoin was constructed to save the world from this. So what are negative rates and negative yields, and why will they be a financial disaster? Well, the concept of negative rates is actually fascinating, as it essentially defies all logic and the tenets that the banking and lending system were built on. So, to understand negative interest rates, let's first understand what interest rates are. The whole idea behind paying interest is that your money is worth more today than it is tomorrow. This has to do with many factors, like the lender could invest that cash to make it worth more, and inflation causes the purchasing power of a dollar to decrease over time. Thus, if you want to lend out money for a period of time, you would expect to earn interest on it, and more for the longer it is lent out. This is how it's been since the creation of values, loans, and fiat money. Now, what are negative interest rates and negative yields? Basically, it means a borrower is getting paid to borrow money. Can I borrow $100? Banker says, sure, I'll pay you $5 to lend you $100. What the fuck? This is a negative interest rate. A lender will pay to lend money to borrowers. Another way to look at it and understand it is with a house mortgage. If you were to have one with negative rates, that means you would actually end up paying less than the price of the house to borrow money. The essential idea behind negative rates is they are designed to discourage banks from keeping cash on hand, as cash becomes a liability for them. Cash deposited at a bank yields a storage charge, rather than the opportunity to earn interest income. It's supposed to work like this. Governments are the ones paying to lend, as they have the taxpayers' dollars that they didn't have to sweat to receive. The banks are then encouraged to borrow from the government, then lend that to business and people who use that cash to spur economic growth. That theory sounds fine, yet for some reason in countries where negative rates are a reality, that growth is not happening. The total amount of negative yielding debt globally has ballooned to over $16.8 trillion, or 30% of the total global market, growing by nearly $2 trillion in just the past 21 days. There are now 12 countries whose debt sport negative 10-year yields. Switzerland with a negative 0.92%, Germany negative 0.53%, Denmark negative 0.49%, the Netherlands negative 0.43%, Austria negative 0.3%, France negative 0.27%, Finland negative 0.27%, Sweden negative 0.21%, Belgium negative 0.20%, Japan negative 0.18%, Slovakia negative 0.14%, and Slovenia negative 0.04%. It's obvious that Europe has got an addiction to negative rates, but across the globe, other countries are hovering close, with 25 other countries under 4%, including the US at just 1.73%. Why isn't growth happening in the countries that have implemented negative rates and yields? In a perfect fiat world, it may have worked, but there's an elephant in the room, and it's called the government's power of quantitative easing. Japan was the first country to introduce this concept in 2002, and basically it's governments printing money out of thin air and using it also to spur the economy, as well as pay off their own debts. But in reality, it's the government's creating money out of thin air to buy stuff that it does not need, like stocks and bonds belonging to various companies. Why do you think the stock market has never grown like this in history? The Dow has gained 18,500 points and 3x since the financial crisis in 2008. Quantitative easing causes cash to become worth less even quicker due to increased inflation. And then there's negative rates, meaning banks can't earn interest on that cash. These negative rates, which begin with the central banks, usually propagate forward as they become an addiction. They come to government bonds, your neighborhood bank, and then eventually to a country's citizens' own bank accounts, charging you to hold cash in your bank, coming directly for your saving. Sounds dystopian, right? And this dystopia might be some people's truth here soon. Here's the thing, you probably are already exposed to negative rates if you have any money invested in a pension or retirement account. Someone, after all, has to own the $16.5 trillion of global debt that yields less than zero. But a direct assault to a bank account is happening in countries of two serious negative rate offenders, Switzerland and Denmark, where citizens' wealth is being sanctioned by their banks. Jyske Bank this week said it will charge Danish depositors a 0.6% fee for accounts over 7.5 million kroner or 1.1 million USD. Sweden has it worse, where its bank UBS Group AG had the level at which the annual 0.6% fee kicks in to 500,000 euros or 560,000 USD. How long before lower balances will be subjected to this monetary assault? This negative Nancy is spreading like a virus across the globe, and it will be coming in the next 5 years to a bank near you. I can almost guarantee that. What's a citizen to do in this type of situation to save their wealth if they don't have enough for the assets the rich are accustomed to, like real estate, stocks, and business growth and expansion? Well, if cash was the only option, they would take all their cash out of the banks and tuck it under their mattress or bury it in the garden. The governments of the world know this too, as the International Monetary Fund IMF wrote a blog post called Cashing In: How to Make Negative Interest Rates Work. In the blog, they explain the need to phase cash out, where central banks and the governments issue their own e-money, most likely their own crypto, which would automatically pay negative interest rates in whichever bank account it was held. A country's cash and e-money would have a conversion rate, where the cash in terms of e-money depreciates at the same rate as the e-money. Thus, there would be no benefit to holding cash relative to bank deposits. And guess what? A major country is attempting just that. China will officially be the first central bank to issue a state-backed digital currency. According to leaks, 7 institutions will initially receive the digital currency, including the Industrial and Commercial Bank of China, China Construction Bank Corporation, Bank of China, Agricultural Bank of China, Alibaba, Tencent, and UnionPay. The digital currency is dubbed DC/EP for Digital Currency Electronic Payments. According to this Forbes article, the currency could launch as soon as November 11th of this year. So Chinese citizens will officially become at the mercy of their government, while the government is acting willy-nilly, devaluing its yuan to keep its manufacturing boom extending for a longer period of time. The Chinese are disproportionately the owners of the manufacturing sector, over 25% control. They own the most debt. For example, over 1.1 trillion of the US debt, or 17.3% of the total foreign holdings, essentially meaning they have the highest level of capital risk. A global economic contraction would be devastating for China. Thus, China is getting control of their currency, eventually making their citizens pay for not playing into the game. Spend, 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 consume, consume, consume. That is why Bitcoin will become that much more attractive to them. And when it spreads to other countries, believe me, it will, their citizens will be drooling over it. Why? Well, Bitcoin cannot produce negative yields or have negative rates written into its code. The amount of Bitcoin minted into every block is predictable, so there is no future expectation of abundance. Scarcity is coded into the Bitcoin system's core, and there is nothing anyone can do to change that. No government or external entity can artificially generate an expectation of Bitcoin abundance. Bitcoin restores the natural value of money, which has been lost, considering supply and total demand. Emissions are 100% predictable, transparent, and not subject to the whims and convenience of governments across the globe. Citizens across this globe will start to realize the war on cash as negative interest rates are forced down their throats, and the capital flights into Bitcoin will be something to behold. Satoshi predicted this and intentionally made Bitcoin to save people from a problem not even known in 2008. There will never be a Bitcoin-based negative yield asset, period. Cheers, viewers. I'll see you next time.